What's good, guys? Just going to go through another breakdown on EA. I've done a similar call to this in my community not long ago. Well, in fact, it was only about an hour or so ago. But yeah, I'm gonna break this down, and I'm gonna show you the concepts and the methodology of what I use within this market to identify my entry drills if I'm wanting to get into a trade or not, and also how wyckoff is everywhere within the market, the benefits of using it, and also how fractal this market can be. So we have the Euro Aussie up here. We'll go through it now. What I'm going to do is quickly recap the trade I already took, and I'm actually currently in a short now. So we'll see how that goes. I'll sort of work from here, and we'll go to the present sort of PA, which should present itself now. So just to recap, I'm not going to go overboard with this, but we had a clear M15 distribution, right, on here. So as the guys know in the community, I traditionally like to take my trade from the top here. As soon as we have the UTAD, or what others call the liquidity grab, and we follow it with a breaker structure on the same time frame of the schematic, which is for me, it was a 15-minute. We have this breaker structure here. And then obviously we're coming up to mitigate. Traditionally, I would have had a short here. However, for me, just being completely transparent, I took a couple of losses a few days ago, and it was just me simply being a bit too aggressive, not waiting for enough confirmation. So for me, I said to myself, okay, I trust my analysis, I trust my trading plan, but I just need to tweak a few different things, maybe sit on my hands just that little bit extra before before getting actually into the trade afterwards, right? So what I wanted to see and identify was clean breaks of structure on M15, which we finally got at the lows here, right? So for me, obviously with this entry here, I had this low here marked out, this low here marked out, and also this low here marked out as well, right? So I basically said I had an alert here, and I said to myself, as soon as price breaks this, now I have green light to look for entries, look for a short, and actually join in with the market, and hopefully catch some pips. So the fractal nature of this market, I'm just going to replay the PA here, right? That initial entry, okay? Because what a lot of people were thinking was, well, the whole point we're using wyckoff and trading order blocks and points of interest and imbalances and so on. Where you want tight stops, right? You know, if we was to take this order block, we're looking at what, 15 pip stop, thereabouts. You know, if you want to give a trade a little bit of breathing room, you're looking at about 15 pips, right? Whilst the industry standard is probably around that, if not just slightly bigger, around 20 pip stop. The community what I'm within and the trades I like to take, unless it's something like gold, which is extremely more volatile than just traditional currency pairs, I like to have a slightly tighter stop than that. So for me, a 15 pip stop is probably a little bit too big. So what I would naturally do is logically go, all right, if we take this into present day, okay, back to here, or sorry, if we take this back, should I say, what I would see, let's take this back just one more actually. As we're coming up and approaching this point of interest, right? So I'm not taking a blind limit at this order block. Okay, this is still a point of interest. Granted that this has led with imbalances to a breaker structure, okay, which is significant because now it's, you know, my trading plan is as simple as soon as we have that liquidity grab with the breaker structure, that is now a green light to enter a trade, okay, especially on the same time frame. This isn't an M1 schematic, M1 breaker structure. It holds a little bit more weight, right, because it's an M15 breaker structure. So that's something we want to bear in mind. But what I wanted to do was, okay, let's just try and see if this level does hold. So what I would naturally do is, this is still a valid OB. It now becomes a point of interest, okay? So this is a point of interest within this grey box, is point of interest here, which I'm not sure what, this is M15 institutional candle, there you go. Okay, so it's like a new point of interest within a point of interest. Okay, I don't want to say that too much because it's quite confusing. But what I was doing, I was scaling in, okay, because I was like, okay, what is the likelihood, because I don't really like to take blind limits, what's the likelihood of this area holding. So just this gray box here is, just to recap, this new OB, right? So I'm going down to M1. What can we see? What's the likelihood of this holding here, right? So ideally, what I'd like to see is either just straight up breaks the structure to the downside when we approach this region, or maybe we can see an additional distribution schematic, right? So I was just sitting on my hands for now, just being patient. And then as soon as we started approaching it with an uptrend, nice uptrend, and then we start getting that lateral movement, okay? As I always say, just above or below the points of interest, which is perfect. It's what we want to see. This is traditionally going to always be a schematic, okay? So it's just obviously a fractal version of the higher 15-minute schematic, okay? For me, this isn't quite, it is technically valid on a 1 minute, but it's still a little bit too large. The 30-second is a little bit clearer, but I actually noticed this on the 15-second, okay? And what I noticed, okay, is, well, hold on a minute, this is clear as day distribution, right? Kind of giving away what it was now, but if we bring it back to there, you can obviously see what's happened. But just to break things down, right? What we have here, we have an uptrend, a nice continuous uptrend. Then we start seeing a little bit of a support, right? So what is the point of wyckoff? Okay, it's to engineer liquidity and take out the impatient or the ill-informed, uneducated, right? So what a lot of retail is doing here, okay, they're seeing 3 to 4 taps of this. They're looking at this as support, okay? And obviously what they're doing from this point, okay, from here, where have they gone? They've just pumped loads of, there's going to be a load of orders here going long, all right? What happens to them? They get breached straight through the floor, okay? It then comes down again, okay? A lot of people who trade smart money concepts will look at this and think, well, hold on a minute. Bearish order flow is now being respected from this order block. We've broken shot to the downside, okay? A load of retails are going short, or ill-informed are going short, thinking that this OB is going to hold, all right? But we know that that's not the case. Just 1 second, guys, real quick. Sorry about that, just shutting the door. Don't want to get any background noise in if I can avoid it. But yeah, so we're making that nice lateral movement, right? And then what's happened, okay? What's the story trying to tell us right now, okay? So if we go back and we delete these drawings, okay? So feel free to fast forward this if you need to. I'm just going to mark this out for obviously educational purposes. Oh. So just to let you know as well, guys, with this, there can be unlimited secondary tests, okay? Traditionally, if there's a lot of secondary tests, it just means that it's just obviously it's engineering more and more and more liquidity. So more than likely, we're going to you know, really get a big move after this, okay? So obviously we have a secondary test of this area here. We have a secondary test of this over here, okay? And again, what is the point, okay? Because what a lot of people don't understand is they just think retail gets wrecked, and it does 100%. However, what we have to remember as well, yeah, is that a lot of people do know these concepts, okay? It's not a hidden or a secret concept, but it's how you implement it, how you apply it within your trading, okay? Because what a lot of people will do will be like, okay, right, this is the highest point to short from. Some people might be looking at this as, you know, a schematic. This is the UTAD, and then we've had that order block, voided move, breaks a structure, and they're taking this OB here, right? And then especially if they're even more conservative and they go to M1 or like the second time frame that we're in, look, wait for that break of structure and then gets in here on the pullback, maybe from this order block, Okay, and whilst that's granted, you can still actually maybe bank like a little 1 to 5 and so on. That's completely valid. However, we know if we're labeling this schematic here, from where was the first point where price started going lateral movement? Where did it start going lateral? Okay, it's here, right? So it's clear to say that this is fair to say this is our supply zone. Okay, which is our supply zone. So it makes sense that this is our bias climax, all MAC reaction, secondary test, sign of weakness, or multiple signs of weakness here. We're coming up, secondary test again, minor sign of weakness as we've broken to the downside very intricately. Okay, so a lot of scalpers potentially going short, getting liquidated as we come on the way up. We have a minor up thrust, which takes out everything to the left here. Okay, let's just actually rectangle this off so it's like focused in so you can see this is what I'm looking at. Again, we get a nice little reaction, okay? So a lot of people thinking, oh, okay, now's the liquidity grab. Now's the liquidity grab, okay? But again, it makes one leg higher, tricks everyone again. So you think like a lot of people, what are they doing when it comes into this zone here, okay? Similar to what I marked out down here, right? A lot of retailers now thinking, oh, 1 touch, 2 touch, 3rd touch, little reaction here. Oh, it's resistance, go short. All of them now get liquidated and it continues higher, yeah? And then also as well, what's happening now? We're broken to the upside, okay? We're making higher, 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 low, higher, 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 low, higher, higher. What are retailers doing? Scalpers continuing, thinking it's going to continue up, higher, higher. They get liquidated, yeah? So every single person, retail-wise, more than likely is getting liquidated within all of this entirety of the move, right? That's the whole purpose of wyckoff, is to liquidate people out their positions. So yeah, this is what I was seeing anyway, right? And then what I wanted to see was minor breaks of structure, okay, or a minor break of structure, shall I say, okay? Now, don't get me wrong, okay? I do not necessarily advise this. If you do not trade this style or you are new to it, you have to back test and also forward test this vigorously. Paper trade it, do what you want, but as soon as you jump on the live market and you start implementing this, going down to this 5-second time frame, so on, you know, you're more likely going to go on a losing streak, okay? Because not only have you got to get the analyst right, you have to get the timing right. You have to get the entry right. Have you given yourself enough room for spread? Have you given yourself enough room for if you're buying or selling? Have you allowed for slippage? You know, all these things as well. So the amount of times I'm sure we can all aware who's watched this, you get whipped out and then it goes either side, right? It's so annoying, but it happens. Okay. Now, as soon as I wanted to see a break of this, okay, and also equal lows. Sorry, I didn't realize that so fast. Actually, I wanted to see equal lows, okay, because that gives me the intent of where is the market going, okay. The equals now we have 1, 2, 3, 4, 5 candles, 6 candles, 7 candles as a floor here, yeah? If I just pull this across, yeah? Again, what are a lot of scalpers doing retails right now, okay? We've come up 1 tap as a little retest, 2 tap, 3 tap. Especially after this reaction, what a lot of people doing? Going long, yeah? So the whole way, literally from the very first point to the absolute final point, is to liquidate as many people out the market. So basically it's called the path of least resistance, okay? Whether that's support or resistance, doesn't matter, but that's how the institutions see it. And they want the path of least resistance. And that's how they're able to implement volume like this with intent, where there is no correctional movement like this, where it's just all balanced price action, very gradual. This is impulsive, right? That's how they implement it, because they wipe everyone out of the market, gather the liquidity and use that liquidity and that volume to then impulsively go in the intended direction they want to drive themselves into, yeah? So as soon as I saw this, obviously this here now becomes entry, okay? So what we can do here, okay, obviously you can see clear as day we got tagged in, but I always allow, we're an EA, I always allowed 0.8 pips as slippage, whether I'm buying or selling, always, just because EA has slightly higher spreads. I do trade on like raw accounts as well, but even then it's still very high. So 2, 3, 4, 5, 6, 7, 8. There you go. And then it will come all the way up to the wick high. And what I would traditionally do is a little bit more conservative. I will allow 2 pips. So we're going to go for a 4.5 pip stop. Okay. And what I was targeting was 157 flat. Okay, which is a 1 to 30, call it 1 to 35 trade, just shy. Okay. Now, if we go to like M10 real quick, why am I targeting 157? Okay. I'm not targeting 157 and just holding the trade. Okay. I am, of course, taking partials all along the way here. So we have this liquidity here. That's a partial there. We have this liquidity here, which is still actually mapped up. That's a partial there. We have this liquidity here, which is a partial there. Okay. And then 157 is there's a H1 imbalance down here, which still needs to get mitigated. And also as well, obviously, so as we know, it's a very psychological number. So it makes sense that we know there's going to be a lot of buy limits there, waiting to take price higher at 157. And also as well, we have these little imbalances here. There's imbalances within this leg. It's just on a slightly different time frame. I just thought the most notable place to put my TP would be 157. Okay. And if I'm actually honest, I'd close about 90% of the position at 157. I've manually changed my TP, and I've actually got a long-term perspective. I think EA is going to go to 160, but I do think we might see down this region here. This is a daily OB, just because we have all of this liquidity here, and there's still, there's a lot of prices. A lot of candles still need to get mitigated. So that was like my thesis on it. If we go to the H4 quickly, sorry, it's quite messy my chart right now. I apologize, but as we can see, there's next to no volume here. It leaves an imbalance. What do you want to see just above that? Liquidity. We have trend line liquidity. We also have relative lows just above there. So I'm looking at least if we scroll across the crosshair across and look at the price, 155.800. I'm expecting that indefinitely, before potentially coming higher and mitigating up in this region here. Okay, that's just like a higher time frame perspective anyway. But yeah, so that's how fractal our entries can be. Okay, so just to recap, we have a clean M15 distribution. Okay, now when price creates that UTAD, that is when we, and also the structure break, that's when we can completely scale in, because more often than not, in the retracement up to the OB you want to take the entry from, this movement here, there's going to be an even smaller fractal new distribution forming, okay, which is what we see here. Yeah, that is literally exactly what we see here. Oh, I'll quickly bring this up. And here we go. Yeah, come all the way down, so on, so on, so on. All the way down to here. And then we obviously break to the downside, sorry. I'm not going to show you all of that because it's going to take ages and ages. That's a new trade I'm in now. But if we go into M10 again, let's bring this across. So that was this trade here, what we've just gone through, right? Now I'm going to just delete this, okay, just so I don't want stuff in the way and get too messy. As we know now, that's the one that was a 1 to 35. We can see where the price actually come down to. If we held this trade, we look at obviously lowest point here, just shy of 157, literally just shy of it. So it was a fairly good TP, but again, this is why you take partials along the way, because if you didn't, you'd be extremely annoyed right now. But again, when we was here, what did we want to see, right? The trade I went a little bit heavier on in terms of risk. I wanted to see more confirmation rather than just here, because this 15-second entry up here was extremely aggressive, that 1 to 36 or 1 to 35, whatever it was. We had the breaker structure here, we had the breaker structure here, and we also had this low broken here eventually, right? As we can see, if I just quickly play it, there you go. Yeah, So this low is now broken, and we left this valid OB. Okay, so with on the higher time frame, or on the 15-minute time frame, sorry, we've distributed. We've also had fractal distribution on 15-second from here, and now we've had 1 break, 2 break, 3 breaks to a downside on EA to show intent that the trend on M15 is now switching to bearish. Okay, bearish order flow is now being respected as opposed to bullish. We also have a lot of liquidity to the downside. We have this trend line liquidity coming across here. So there's lots of reason for price to go down. So I actually set a limit here, and I don't normally do that. I normally always manually enter, but I set a limit here. I was happy with the risk. I was happy with the analysis. It fit my trading plan, so I took the entry. But one thing again, I want you guys to notice. Okay, I'm not sure what time frame this is, right? Now this entry here was only, I don't think I took it on M10 like the actual entry. So I actually had one with a wider stop, had one like this. Had one here, and I think it was like, I don't know, like an 8 pip stop. Yeah, about there. Maybe a 9 pip, so I allowed for a little bit of slippage. And then again, 157 region. So I think this was like about 1 to 12, 1 to 13. Yeah, there you go, 1 to 13 trade, give or take. So again, that's still a fantastic risk to reward. Okay, how can we improve that risk to reward? Okay, with a logical thesis behind the whole thing. So it's all well and good just going down to M1, but if we don't know what we're doing or looking for, then there's no point, right? So what we want to do is now, okay, when price comes back to here, as we're approaching, okay, what is price telling me? What does it want to do? What does it want to do? We go down to M1. Oh, look what it is again. Yeah, lateral movement is now starting to form. Yeah, a lot of people now are considering this as consolidation. Yeah, a lot of people are seeing that as consolidation. So again, what can we see? Prices come down, okay, especially when we've violated this order flow here, and we've wicked higher here. This significant wick here tells us a higher story because it tells us that price wants to come higher. Whether that's actually just generally continue higher or to distribute is another matter, but we know price wants to come higher because there's imbalance here, okay? Also, you could say the same from here. As soon as I saw this wick here, and we could see that these OBs here weren't getting respected, I knew it was a schematic starting to form, because what did? We started forming, again, same principle, what I've been saying the whole video. What do retail see here? Support. What do retail see here? Resistance, yeah? A load of buy-ins going on here, a load of sellings going on here. Both sides eventually get absolutely wrecked, okay? It's the whole point of the market. It's what you want to do, right? But as we can see, right, where did price start forming that support? Where did it start forming the lateral movement, right? It was around here, right? So it's fair to say that we can mark this up accordingly, right? So how I would mark this up would be price climax. This is our like supply zone here. We have automatic reaction, secondary test with the buyer's climax. We have a minor sign of weakness as we have broken structure just so slightly here. Okay, so this is going to entice again a load of sellers into the market, and again the uneducated smart money concept will be going from this order block here, and what happens? They get stopped out. Yeah, there's another lot of people liquidated, and again, what happens here, right? So I've slowed this down just a little bit. Let's see what happens. So obviously, what I anticipated, right, was we actually had. Sorry, let's go here. We had the UT here. And the reason this is the valid up thrust is because we took out the buyer's climax. Okay, so we know, let me just actually draw this on quickly for you guys. The majority of this schematic, sorry about that, guys. The majority of this schematic, someone's cooking, should be within this range here, right? Which it is. Yeah, the majority of this, majority of the range should be between the buyer's climax and the automatic reaction, or the seller's climax, the automatic reaction, or rally, however you want to. It doesn't really matter. It's the same analogy. All right. As soon as we get a breach of that, it's a valid up thrust. Okay. And then obviously the final liquidity grab, and also, which holds even more weight, we've mitigated our point of interest, right? This is our M15 point of interest. We've now mitigated. Okay, so we go to M15 quickly. Yeah, this OB now has been mitigated here, which is perfect. All right. So instead now of having our stops all the way up here, what can we do now? Okay, we can, to be fair, this is even tighter entry. I think this again was like a 15-second, maybe a 30-second. Yeah, it was a 30, yeah, there you go. It was a 30-second entry I took here because what happened? Look, the broke structure. Yeah, you could argue it's either there. Oh no, what's going to happen? But the broke structure here, the broke structure. If you want to be even here, even these lows here, right? So this was a valid OB to take again, even in the 1 minute. Yeah, even here, still a phenomenal risk to reward. Yeah, you're halving what this whatever this is. So you're probably looking about like a 6 or 7 pip stop. We allow 65. Let's go 57, and then allow that 2 bits extra. So 3.7, 5.7. Yeah, still 1 to 20 guys. Still 1 to 20 trade. Crazy stuff. This is literally just by scaling and looking at the fractal market. Okay, so within that M15 distribution, we now have come down. We've created a new 15-minute point of interest. Okay, we've scaled in again, and now we have a beautiful 1 minute schematic to take this lower 1 minute distribution. Okay, as well as that 15-second distribution all the way up here. All right, so this is how we can scale our entries as well. And obviously, as we know, it's just obviously falling through the floor. So we'll come up to remitigate again, actually tag us into a trade, sorry, and then obviously breaking down. So I'll stop that now. We'll go back to here. So that's all cool. That was on the entries from the other day. So that was this entry from up here as a fractal, 1 to 36, and this was a 1 to 20. So it's, you know, crazy risk to rewards within this as well. And again, a trade I'm in right now, and it looks like it's coming up to remitigate. So we'll see how this is. Again, one thing I noticed though, even though we come down to 157, right? We go to like a little bit of a higher time frame, maybe like a 30-minute. Okay. If we look, we still have what liquidity do we still have? We still have these equal lows, these equal lows, these equal lows, these equal lows, this trend line liquidity, these equal lows. Okay, and also as well, we have on the higher time frame that foresight that we have this trend line liquidity here. This trend line liquidity still hasn't been purged because we need to, until we break this low at the minimum, it still hasn't been purged. And we also have imbalances here to fill, as well as a daily or the 3-day point of interest. Okay, so there's reasons for it to come lower. There's a lot of liquidity to the downside, right? So cool, that's all well and good. And then just to take you through this trade, right? What do we want to see? Okay, so we've come in, we've got that M15 point of interest still, but I don't know if you guys can actually see this on my screen. Hopefully you can, if I really zoom in. We didn't actually quite mitigate this M15 point of interest. Okay, we didn't quite mitigate it. It's like 0.2 pips away, maybe, give or take. Yeah, like 0.3 pips. It didn't mitigate. Okay, so it might want to come into the 50% range and mitigate there, right? But again, with the foresight, okay, there's been a clear reaction off of around this OB. So it'd be unwise of me just to take a sell limit here. Okay, just thinking, oh, it's going to go short. Okay, because there's low liquidity. It's unwise of me to do that. I want to see confirmation. Okay, now if we drag this across, and obviously we've got it here, this M15 OB. Again, what do we do? All right, when price comes in, let's replay this. And I'll talk you through it. Okay, we're here again, right? Let's scale down. What can we see? Okay, this is scary stuff. Like if you master this, it's scary stuff, right? So we start getting a little bit more of a range in price. But again, for me, I know if we go on a lower time frame, it's going to be more lateral movement rather than that aggressive. All right. So I know this is a real low time frame schematic, okay, because we are getting that intentional sideways support forming here, this rectangle. However, we are still technically making higher, 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 low, right? So again, this is very aggressive, guys. So I think it was a 15-second. We went down here, right? This is what I'm saying. Again, what happens? Just below the point of interest, we're in a nice uptrend. Lateral movement starts forming. Yeah. Perfect. What do we know that as? A schematic, right? So we can clearly see that this is a valid buyer's climax. We can see that this is an automatic reaction. This is our supply zone here. Yeah, because we have, this is where the lateral movement started. It's not a point of interest. I'm just doing it for obviously a rectangle. As you know, retail seeing this as 3 taps as a support, going long. Sweet, they're in profit, all well and good. Smart money are also seeing that this OB near enough holds. Oh, it's all good. Let's go. Everyone go long. Just everyone go long. Structures long as well. Everyone go long. Yeah, they all get liquidated in a moment, as we can obviously see. And then here, you could argue that this is actually not a valid secondary test, but it's like, I like to say, an upthrust action. So what happens if we don't see a valid secondary test of the buyer's climax? Okay, again, I'm just going to whack these lines in for you guys. Probably not going to freaking work again because the second time, yeah, don't think it would. But again, here, yeah, we can see we're within this range of sorry, one sec, guys. That's it. We can see we're within that range, yeah. Here, we break up, but what do? We retest that range straight away. So sometimes not every schematic is going to be absolutely picture perfect, right? However, we can see an analogy is still the same, right? It just means like sometimes you get an extra shoulder. So it can just be an additional secondary test, or as I call it, an upthrust action. Okay. And then again, this is now a valid UT. Or to make things easier, you can just say sometimes there's 2 UTs. So this could actually be an upthrust, and this can just be an upthrust as well. Because we've reached the buyer's climax, but instantly we've come back down to retest the range again, right? And again, what are we waiting for? We're anticipating a UTAD, right? And we're also anticipating a mitigation here, right? So all of this stuff, what the market is trying to entice me in here, getting into shorts at this range here, getting into shorts at this range here, getting into shorts at this range here. Yeah, I'm literally not even bothered about this, okay? Even if we can make a 1 to 5 down here, because I know it's a fake out. I know the markets, the institution, if they're trying to entice people to go short right now. Oh, it's broken to the downside, so on, so on. All right, that's good. We're seeing intent now. So this is like a valid sign of weakness. We're seeing bearish momentum to the downside. But we know, what do we anticipate? 2 things, a UTAD and a mitigation of this zone. Therefore, it has to come higher. Yeah, so shorts are not even in my head right now. I'm not entertaining that at all. We're retesting the low of the range. And then look, we come into here. Obviously, if I bring this across, we have now mitigated. Okay. Again, 15-second time frame. What do we see? Break of minor structure. Yeah, this low is a minor structure here. This is extremely aggressive trading. Extremely aggressive, but it still holds weight and it's still valid. Everything which is happening on this time frame, we do on higher time frames. The only difference is this is just extreme fractalities of the market. This is extremely fractal. Okay, this OB is completely valid to go short from, right? All the way down to here, 2 pips extra. Call it a 3 pip stop, just to be 3 pips above. Let's go here, and then we're going to add, let's go 88. Okay. So, I mean, to be honest, a 4 pip stop is a bit excessive here. You don't even need, like, honestly, you didn't even need that. But again, go back to M30. All right. Where are we targeting? All this liquidity, which was down here, right? Again, 157 at the minimum. We've got this liquidity here. We've got this liquidity here at the minimum. You could argue even a little lower. But for me, this is going to be a phenomenal risk to reward. So I'm going to go like 157 on this. Okay. Let's go here. So we know if this breaks through, that's a 1 to 40 trade, 1 to 39. Yeah, it's crazy, absolutely crazy. But you know, the even scarier thing, right, is I'm not sure where this was. Let's have a look. I'm not sure. Forgive me, guys. I'm improvising right. I'm proper improvising right now. I don't know if it was here, but if we go, so let me just box this off quickly and look at all this here. This is how crazy the market can get sometimes. Yeah, so this was it here, yeah. So we're on the 1 second time frame right now. Yeah, 1 second. I'm just proving to you guys how fractal this market can be. It's absolutely crazy stuff. Okay. What do we see here, right? Was it here? Hold on 1 second. Where was this? Hold on. Sorry, guys, 1 second. Oh, somewhere around here. Anyway, I saw a 1 second distribution, and I literally was like, "Holy crap!" I can obviously see it here, but it's now this is a valid distribution here. Even this little distribution. Oh, no, this is it here. Sorry, here we go. So again, look, even I'm experienced, but it's training your eye to see it on the 1 second. It is crazy stuff, right? What have we seen here, right? I know there's a load of gaps. You're gonna have to bear with me, but it's still happening on the 1 second time frame. Okay. Clean up trend. Yeah. Where do we start going lateral? Here. Yeah. Buyer's climax. All MAC reaction. Secondary test. Secondary test as a sign of weakness. Yeah. What retail seeing? 3 taps. Support. Go long. Okay. Up thrust action or an up thrust, you can call it, and this could be actually the up thrust action. And then what? Final distribution at the end, the UTAD mitigation. Okay, where's the institutional candle? What took the liquidity? This here. Yeah, this is on the 1 second time frame, guys. Within the 15-minute distribution, within the 1 minute distribution, we've now identified a 1 second. Sorry, let's go back 1 second, guys. Jesus, these timeframes are crazy, but it just goes to show the nature of this market is absolutely mental. There you go, yeah? Look at this, picture perfect. Look at that, how it's reacted to the absolute pipette. And that is how these guys enter the markets. Look at that, entry there. Okay, off of this, there's no 50% at this range because it's just, you're on the 1 second, you're never going to get filled, ever. Look how big a 2.8 pip stop is. It's mental. If you was literally to go on the raw spread account 1 pip, drive this all the way down, and again, 1, 2, 3, 4, 5, 6, 7, 8. It looks like you're in so much drawdown, and you've got a 1.8 pip stop all the way to where? 157. You know, so this is absolutely maximal risk reward, a potential 1 to 88 trade. Crazy stuff, right? But what I want you to actually identify quickly, right? If I was to box this off, okay, this is a 1 second time frame. Yeah, 1 second distribution. Yeah, primary supplier, buyer's climax, all MAC reaction, secondary test, up thrust, UTAD, break a structure to the downside, broken this low, come up, mitigated this institutional candle, what took the liquidity, completed the mitigation, and then we fell off. Yeah, that happened on the 1 second. Go to the 1 minute. It's breaking my laptop, guys. It's literally just bloody crazy. Goes to 1 minute. Again, what can we see? That 1 second distribution was within the buyer's climax, all MAC reaction, secondary test, up thrust, sign of weakness, UTAD, breaks the structure to the downside. Okay, so there's no reason why now, to be fair, this is why, again, in trade management, why I'm not going break even yet. There's no reason why price can't come all the way up here. again, to mitigate their orders here before continuing lower. Yeah, it's completely valid. But this is something what I wanted to show you guys. Oh, here we go. Perfect. So I didn't actually know I was in replay mode there. Crazy thing. Even though it makes sense with the drawings. It's me getting overwhelmed with these crazy markets, man. But yeah, basically, that's what I was seeing anyway, regardless. Okay. So these are my 3 entries. Obviously, we're in slight drawdown here with this one. But my higher risk trades were at the top here. Okay, because obviously they're in the higher discounted region, right? So for me, it just made sense. This purple line, I took partials off because what did I expect? Where's logical price for PA to react from? This order block here, right? So I wanted to be just above it or just on it. I'll take a portion off of this trade. So this one here, what tapped me in? Portion is already off this, and it's covered the potential loss if it was to go and draw down, and hopefully I can get tabbed in for these even bigger trades up here. Okay, again, it's completely valid, but that is an M1, a 1 second distribution within a 1 minute distribution. Yeah, fulfilling a test again of the 15-minute distribution. Yeah, that's how crazy and fractal these markets are. So it's pretty crazy, but that was my thesis on EA. Again, I do predict lower. We'll just have to bear in mind, we'll have to wait and see where we believe this price will go. But that's just a little insight on how fractal and crazy this market can be, guys. It truly is amazing. There's opportunities everywhere. Just back test and forward test vigorously before you even attempt going down to these timeframes, because timing is everything. And also you need to learn about spreads as well, because they do play a part when you're going down to these low timeframes to actually get into the trade and obviously prevent yourself getting stopped out too. But yeah, guys, that's a nice breakdown of EA. I hope that helped anyone regarding schematics. If anyone wants to follow me who isn't already on Instagram, it's just LH__FX. I'm just trying to obviously grow a little bit of a following, get some recognition for the work and the community, what I'm trying to help with. And I'll catch you guys soon. Sweet, guys.